Is Facebook, or now known as Meta, dying, and are investors correct with the revaluation of the name? Well, in this video, I'm going to provide you guys all with all of the important information that you need to know, plus give you 3 different valuations of the company and let you know what approximately 1,000 people believe to be their entry point for Meta. So smash that like button and subscribe if you're new. You're watching More Money. Let's get it. Now guys, let's jump right into it. Meta reported year-end results this past week and the stock just fell off a cliff, dropping over 20%. So what exactly happened that caused the stock price to drop so much? Well, let's start with what it wasn't, which of course was not revenue growth, because as you can see from here, their revenue actually increased by the most it has done since 2018 at 37%. And for all the ho and humming about user growth reversing, you can see here that contrary to what you may infer from reading the headlines, Facebook actually increased the number of daily active users by 4.6% overall year over year. And you can see that they did get growth in the areas where you wanted to see growth, which is in the international segments, albeit the growth was a lot slower than what I would have forecasted early in 2021. Now, digging into that daily active user figure a bit more, you can see that North America has largely matured, which is nothing new as it continues a trend of slightly declining user base. Of course, Asia slowed a bit as well. And the big surprise was the rest of the world actually declined for the first time. And I think that's the first time ever. But note guys, this is just one quarter. And so it may very well just be a blip. I say this line all the time on this channel, but the great Charlie Munger has been quoted to say that business results only go up in straight lines in the pitch books of investment bankers. Over the normal course of business, we should expect volatility, especially as the business begins to mature. But let's put this all into context. From here, you can see that the vast majority of Facebook's revenue comes from North America and Europe. And when you look at it from a revenue per user basis, you can see that North America is generating somewhere between 10 times and 20 times the revenue as the average Asia or rest of the world consumer in those segments do. It's anyone's guess what the maximum revenue per user in each of the geographical locations could be, but I would say it's higher than where it is today, especially in developing nations. So what am I saying here? I'm saying that Facebook has pricing power, as it is a very cheap and powerful medium to use for advertising. And if you go back into the daily active users chart, you can see that the Asia Pacific and rest of world have a substantial majority of daily active users. So you never have to get the monetization rates per user to the same level as you do in North America to make Asia and the rest of the world the largest revenue segments for the business overall. And this is aided further by the fact that a big part of China and Africa is still emerging onto the internet. So as I said previously about Facebook, I still believe that there's growth ahead. It just may come slower than it has previously done, which once again is not a surprise for any of us, and it's not the reason why the share price crashed, in my opinion. I think there's 2 reasons why the share price actually crashed. The first is a challenging Q1 revenue guidance that was provided. They only expect 3% to 11% growth year over year. Now you might think that that's just Q1 guidance and the rest of the year may pick up, but when I took a look at the reasons why they expect growth to slow, the reasons seemed more like issues that we expect to be more pervasive throughout 2022. From here, you can see that on the impression side, they cite that they see continued headwinds from people not using Facebook in the same way that they previously did, as short videos are more used now, which are monetized at lower rates. Does that sound like an issue that will only impact Q1? I don't think so. It's the same story with pricing, as they cite the Apple iOS changes and, here's the big one, reduced advertiser budgets due to macroeconomic challenges like cost inflation and supply chain disruptions. These do not seem like short-term Q1 issues to me, and I expect them to be more pervasive throughout 2022. So what exactly does that mean for my valuation? Well, I rolled the midpoint of the 3 to 11% year-over-year growth into the full year for 2022, which is approximately 7% growth in revenue. Am I being too conservative here? Maybe. Who knows? But I'd rather have them give me an upside surprise than me forecasting too high of revenue for fiscal year 2022. The second reason, and here's the more important reason why I believe that the stock crashed, it's because management has told us that the company is just not expected to be as profitable into the future as it has been in the past. Now, I stopped owning this stock as of mid 2021, so I wasn't following them as closely, so this was a bit of surprise to me, but they did say that they gave a prior outlook here. And you can see how this impacts the model. I really had to juice up the total expenses to get it in line with the guidance of approximately $92.5 billion, which speaks to just how unprofitable the company has become over the past few years. This is the number one thing that has brought down my valuation. So what exactly is my valuation? Well, with Facebook, I'm using an adjusted EPS because I don't think EPS is the correct way to value Facebook. So on an adjusted EPS basis, I'm getting to about $300 per share. And if you want to look at it on a free cash flow per share basis, it's valued around the same area of approximately $300 per share. As my Patreons are growing, so is their anger with me just giving away these models for free on the channel. So for the safety of my well-being, I will leave this model on the Patreon under the $5 a month tier, which gives you access to all the models, including a couple that are trading at 50% of their intrinsic values, in my opinion. Both of which I don't think I've covered on the channel yet. But in the next video, I am going to walk you through how I valued Facebook and the way that I'm thinking about valuing it. I think that's a very good compromise. Now that we have the story and the valuation, what exactly do you guys think? Well, I threw a survey on the channel, and this is what you guys thought. Now, there's no right or wrong answer, but a significant majority of you fall in that $150 per share to $250 per share buy area. I'm right there with you. I think I fall in the anything below $200 a share, which is the price at which I'm going to buy this company for. And of course, that puts me in the category where I'm looking for a huge margin of safety. But of course, no judgments if you buy it higher. Tell me in the comments what you thought about the survey results. Did they surprise you at all? And here's some great comments that you guys gave. Miles Fraser said that he believes that this is a major overreaction in his opinion. He says that Facebook has 2.9 billion users worldwide and in excess of 200 million in the US. He actually added more with the dip. I asked him what he's valuing the company at, and by using a free cash flow per share valuation with a PE of 15 times and 10% revenue growth going on for 10 years, he's valuing the company at approximately $330 per share, which is largely in line with where I'm valuing it using a free cash flow per share valuation method. Don Jun Lim says that even if they fail in the metaverse, he thinks that the potential of WhatsApp and Instagram itself is quite huge. And I actually agree with you there because they're not monetizing those platforms at the same rate as they're monetizing Facebook. And you can see that in all of our valuations that we're seeing, we're not putting any value to Meta, so there's a huge upside there. So Dongjun, I absolutely agree with you. Dojio Forte says that if they just grow at 10% year over year, I'm assuming revenue there, and they just keep their margins the same as where they are, buying at under $250 per share is a buy, which I absolutely agree with. And then he goes on to say that revenue from Metaverse will be a bonus with the potential to be a huge bonus. And I absolutely agree there because if Facebook really changes the world with the Metaverse, which I think they can, and I'll talk about that in the second video here, I think they can generate a serious return on investment. So Dojo, I agree with you there. And my favorite comment came from Patreon, Eric Pohl. He made the comment that the Apple iOS changes have made it so that it's basically no longer the same company that it was a year ago. And he's not saying that it's a good thing or a bad thing. It's just different, and so that the company is now harder to value. And I think he's right there. I think the company is harder to value as we're not given as much information on what the impacts of the iOS changes are. We're all just speculating right now. But then he goes on to say that as investors in Facebook or prospective investors in Facebook or Meta, we have to ask three questions. One, do we believe that Meta will be able to find a new way to get information from iOS users? Two, do we believe Meta can make a profitable business model with video reels? They are saying that it's harder to monetize this. And three, do we believe that Meta can turn the metaverse into a profitable business model? He hasn't made up his mind yet. And I agree with you, Eric. These are very difficult questions to answer. And so I think we all have to ask them for ourselves. And this is where I say you're not right or wrong with any direction that you go with Facebook or Meta. I just think you kind of have to answer some questions that only you can answer yourself. That's why I'm sticking on the sidelines and looking for a huge margin of safety before I buy this company. And guys, I'm actually going to post Eric's questions in the first comment of this video. Let me know what your answers are below. I'm going to post the best comments in the next video where I go over the valuation model of Facebook or Meta. Now, once again, in the next video of this quick 2-part mini series, I will be walking you through how I model Meta in the 3 different ways and the considerations involved in each. So if you don't want to miss out on that video, please consider subscribing to the channel and ringing that notification bell to gain consistent access to non-hype research focused content. Also, if you want access to the Facebook or Meta model now, join the Patreon at the $5 level. That's all it takes. Also, Alibaba is expected to report earnings any day now, and in order to get the most out of that report, you will be served well to get a refresher on what has transpired with the company, which you can get to right here.